U.S. banks reported a 23% earnings surge at the end of last year, which made 2011 the most profitable period for the banking industry in 5 years. However, the growth in profits was marred by the lenders' falling revenue. In its quarterly report on the health of the U.S. banking system, the Federal Deposit Insurance Corp said banks' net income in 2011 was $119.5 billion, a hike of $34 billion from 2010 earnings, and the highest level since 2006. The last 3 months of 2011, boosted by lower provisions for loan losses, posted net income of $26.2 billion, an improvement for the $21.4 billion in the same year-ago period. Fourth quarter loss provisions totaled $19.5 billion in 2011, about 40% less than the $32.7 billion that insured institutions set aside for losses in the fourth quarter of 2010. However, officials warn this trend cannot go indefinitely. The data released Tuesday showed declining bank revenues, with fourth quarter net operating revenues dropping by $3.8 billion, or 2.3%, compared with the same quarter in 2010. The FDIC said loan balances grew by $130.1 billion, or 1.8% in the fourth quarter, as loans to commercial and industrial borrowers increased by $62.8 billion. Residential mortgage loan balances rose by $26 billion, and credit card balances grew by $21.3 billion. The number of troubled banks on the FDIC's confidential problem list fell for the third quarter in a row to 813, down from 844 in the previous quarter. That is the smallest number of problem banks since the first quarter of 2010. For all of 2011, there were 92 insured institution failures, compared with 157 failures in 2010. Jessica Minton, IB Times TV.